Just from those discussions, my question to you is, because you mentioned one of the episodes with Paragon Care, you started off with 3 people in one room, and I think you only had a little bit of money left in the kitty.
Yeah, we were listed.
Yep.
It was a turnaround story.
Was it a cash box?
Yeah, back then, effectively we were a cash box.
So do you want to explain what a cash box is?
Yeah. So it's a box of cash. No, it's so a cash box in ASX terms is effectively a company that's listed, really doesn't do anything, but has money and has an ability to look for opportunities. Now, back then, it was the ASX were quite supportive of that strategy, and so there wasn't pressure to get deals done quickly and so forth. So it was really attractive from an investor point of view. Then it was about the people. So you were investing on the people. Could they deliver on a strategy and so forth? So there was 3 of us in the room. We dealt with all the historical issues in that company. We had no business. And what we did was we went to our existing shareholders. Everybody averaged down from the previous investment because we were fresh board, and we effectively had $1 million in the bank. And so, okay, what are we going to do with this company? And so so our strategy was to build a healthcare company.
Right.
And when I say healthcare, what we researched in the marketplace, and our chairman at the time, or he was there longer than me, had a background in healthcare, so he had the knowledge. He had the knowledge and gave a lot, made a lot of introductions, gave us a lot of intel and so forth. And what we found was Australian demographic for suppliers into hospitals and aged care was cottage. What you had was big end of town, so global players, and then you had lots of mum and dad businesses down the bottom. Nothing in the middle tier, not a lot. Oh. And so that was the opportunity. So you saw a niche. Let's build a middle tier. Yeah. We're not going to compete against the big global boys, billion-dollar companies. But what we're to do is going to roll up. We're going to do an M&A campaign, a mergers and acquisitions campaign, on rolling up healthcare companies and building. Back then, the analogy was BT Trust, funny enough. So BT Trust put out the first wrap account platform. And if people don't know what that is, effectively, historically, when you made investments, you put money in this fund manager and this fund manager, and they were different
vehicles.
Different vehicles.
Yep.
With a wrap account, what happened was all the fund managers went into the one platform,
and you can choose.
You just put your money into one platform, and you diversify your investment as you see fit, and you can move it from one to the other on a daily basis and so forth through one vehicle. So I use that philosophy for the healthcare system, where not be a one-stop shop for everything, but have a whole range of products and services, because the cost of procuring in the hospital system and aged care to a lesser extent, but still hemorrhaging, was horrendous, because it was such a cottage-like industry.
Right.
So the strategy was, let's roll up a whole bunch of businesses, let's create a platform mentality on these businesses, and people could, instead of buying 1 product, 2 products from us, they could buy 100 products, 200 products from us, and they get pricing elasticity for it. They get service. They get almost like a one-stop shop concept. And so that's what we did. And so we did a couple investments, small ones at the beginning. Then we did our first investment into healthcare supplies. The gentleman of that business that we bought joined our board. And he and it's funny when you have someone like that join your board. Like it's really unique, the mindset. He saw everything that I saw was an opportunity in the marketplace.
He saw it as well?
He saw it as a competitor.
Oh
no, that guy. We had an argument one day on this. No, I'm not sure about that. But if you looked at the product range, it was all complementary.
Right.
Just his nature, because it was dog eat dog in the marketplace.
Yeah.
Everybody was the enemy.
Right.
Right. It doesn't matter if I sell shoes, you sell socks, and it makes sense to put them together. Yeah. Everyone was an enemy. And so slowly got his mindset away. No, don't think this way, think this way. And then everything became opportunity. And so he knew this company. And so we went on this journey, and he was really helpful, as a board member with his intel in the sector. And so we worked out our next acquisition, which was, I'm going to say, 6 months after buying his business. I can't remember the exact dates, but let's say it's that. And so we negotiated terms, we did our due diligence, and we were getting at the legal stage where effectively, the legals were getting to the back end. We were buying, I'm just going to use the number, $3 million for this business. So we hired an advisor out of Sydney to help us raise the funds for that. Everything was looking good. We got to 48 hours out from the deal. from signing the legals and
So you're
settling.
nearly there, yep.
Yeah, nearly there.
Yep.
I get a call from the advisor saying, we're not going to get the money. Some of our investors have gone cold. I know we told you we had the book covered, but we don't have it covered. We can only get to about $1 million.
So you're 2 million short.
So we're 2 million short with 48 hours to go. So you can imagine the levels of anxiety through our board and myself and so forth. So we were rattling our brains. Okay, everyone started talking to anyone in our network, any brokers we knew, any investors we knew and whatnot. And it was coming up donuts because we started this in the middle of the GFC.
Which was really, really hard.
It was really difficult
to raise money.
Yeah,
really hard.
Really hard. So, but I'm going to backtrack a little bit now. So after we bought the first medical supplies business, as a listed company, you get daily reports on your shareholders and who buys, who sells, and so forth. So I religiously looked at this, and this name popped up on our register, and he had a decent crack. I can't remember the exact numbers, but I'm going to say it was like $200,000 type investment.
Was he a top 20 shareholder?
He was top 10, I think,
top
on the
10?
back of that, right? Yep. But I saw this on the daily movements, and so I didn't know who it was. So I went to our team. I said, does anyone know who this guy is? And the new director said, yeah, I know exactly who that is. And once again, it was like the enemy concept again. I said, okay, that's interesting. So obviously that gentleman took a liking to the strategy that we were embarking. And about a week or two later, this gentleman reached out and said, can we have a chat? I'm interested, I'd like to know more about your company. I've just invested in it and whatnot. And said, yeah, absolutely. So we met with him. One of our other directors came with us. That meeting was a really interesting one. He spoke about his business. We spoke about our strategy, what we're looking to adopt and put in place and whatnot. And he really liked it. But he didn't get on fantastically well with one of our other directors. So they butted heads a little bit. It was a bit business practices, pricing, valuations, this sort of stuff. So let's say it was a robust discussion. No one left as enemies or anything like that, but it was a robust discussion. But I walked away thinking, I don't think anything's going to come of that. So we left it. So now I fast track to where the current situation. We're 48 hours out.
And you need $2 million.
I need $2 million. Don't know where I'm going to get it from. It's really embarrassing in the healthcare sector that you've got to this point where you're going to sign a deal and then you say, I can't write the check. It's going to get spread through the sector that we don't do deals with Paragon because they can't write the check.
Is there a break fee?
No. I very rarely did I agree to any break fees, and you're probably going to ask me what a break fee is now.
I would have had one. I would have had you hanging, let me assure you.
Yeah, you might have had one, but I wouldn't have been signing it.
Okay.
But a break fee is effectively where if you sign to do a deal and then you can't write the check,
you got to pay a fee.
Then you got to pay a fee to effectively. It's in concept is to cover the inconvenience and the fees that companies spent to get to that point.
So on $3 million, it could be up to $300,000.
Yeah,
if it was 10%?
Potentially 10%, yeah, it could be that high. Yep.
Okay.
But as I said, I didn't agree to it. Not that the vendor was proposing that. So the next 24 hours, we just had discussions after discussions, talking to people and whatnot, but couldn't get anywhere. So it got to about 6 o'clock the next day. So this is the night before we were signing.
Wow.
And the Sydney firm still came back and said, sorry, we're still donuts. We had a mill. We can get you the mill, but that's it. You've got to find somewhere else. Thanks. That's great. And then for some reason around, I'm going to say like 5:30, 5:45 in the evening, in the late afternoon, it popped in my head about the gentleman who popped on our register and came and saw us.
Oh, the top 10 shareholder.
Yeah, and I said, I'm just going to have a crack here. Like, what have I got to lose? So I'm going to have a crack. So I rang him up.
Desperate.
And I said, so-and-so, I won't mention his name. I said, so-and-so, can I come and see you? I have an opportunity that I'd like to talk to you about. It's of an urgent nature. Can I come and see you now? To his credit, thankfully he wasn't doing anything. He didn't have any family functions or anything like that. He said, yeah, come now. Gave me his address because I didn't know where he lived. So he gave me his address and it was out in Mulgrave. So I went and saw him.
Has this sussed you out?
Pardon?
Has this sussed you out? Like, why in the hell are you going to come and see me?
Oh, yeah, for sure. He's a very shrewd individual.
Yeah.
So,
Yeah.
you know me. I'm not much on the small talk stuff.
Yeah.
So basically we sat down and he said to me, what do you want?
There you go.
Why are you here?
There you go.
And so I was very transparent. I knew he wanted us to buy his business.
Oh, because you've had that conversation.
Yeah.
Right.
And because there was a bit of loggerheads at that meeting, we never got to any landing point on that.
Yeah.
But I knew he was keen on that.
Yeah.
And so I said I was transparent with him. So I walk-crossed him. And what walk-crossing means is effectively because he's on our side of the fence, he can't trade in the stock until the news of what we're doing comes out. Or I let him know that we're not doing the deal and there's nothing to worry about. So he agreed to that. As I was transparent, I said, look, I've got this $2 million hole. This is the acquisition. You know it. I know he knows it. So he goes, oh, that's a good one. Good price too. Well done. So he liked it.
Okay.
And I said, I need to fill this $2 million. I have no idea. I didn't know this guy very well. So I had no means of knowing he could write a check for $2 million. But I said, I don't care. He's going to tell me no. I'm not going to say no to myself. And so I sat down with him. We discussed the terms and whatnot. He was open to it all. What I did for him, obviously outside of agreeing on and I'll talk about the deal itself, was I knew he wanted us to buy his business, with subject to commercial terms. So I gave him a verbal and gentleman's agreement that if he helped me on this situation, and I had all these other opportunities that were on the table for discussion and negotiation, I would put them to the side, and the very next deal I would focus on is his. I did not make a commitment to buy it.
That's my next question.
No, I made a commitment to look at his business, but if his business was profitable to the level he had communicated and the valuation was at a level that made sense for us, then I gave a commitment that if those two boxes were ticked and we could work out how to fund it, then 99% of chance we would do it. So I'm not going to waste your time.
Out of curiosity, when you say valuation, what multiple were you using to acquire these businesses?
Between 3 to 4 times.
There you go. Car wash businesses. There you go.
Yeah, between 3 to 4 times. So what you'll find is to get higher multiples, either you're a very high growth stock like a tech company or so forth, but in these types of businesses,
they only get sold
you've got to have
4
high
times.
profit. So because there's
and you've got to be much bigger too.
Yeah,
so
you might have 5 mil profit, 6 mil profit.
Yeah.
Then you'll get higher multiples.
Yeah.
But in that sort of 1 mil zone, you get 3 to 4.
Yeah.
And so he trusted me, and we shook hands.
Bingo.
The very next morning, he gave us the money.
Bingo.
We signed the deal. We settled.
Bingo.
Yeah. So that was that got us out of the shit.
Wow. Because you made one phone call.
Yep.
At the end of the day, I mean, if I go back and you talk about your journey, how you needed to fill that $2 million hole. Sure, you may have rocked up at his doorstep, not knowing whether he can give you the $2 million. You just went and gave it all because you've only got the next day to actually close the deal.
Yeah.
Because you made a phone call.
Absolutely.
It's no different to the car wash guy that I spoke to a couple of weeks ago. He hasn't gone and spoken to his competitor.
Yeah, he obviously does not have the hustle attitude. I'm a hustler, so I'm going to leave no stone unturned to try and get a deal done. And in looking back on the Paragon journey, it was the best phone call I ever made because not only did we get that deal done, then
it set a benchmark and a template for things to follow.
But what it also did is this gentleman, not only did he fund that acquisition, then we came to his acquisition, and it was the most attractive business I've ever seen. He had 80% gross margin.
80%.
The profit was
GP.
Phenomenal.
Wow.
The only negative on this business was a high inventory business, right? But outside of that, at 80% margin, I think you can cop that. And so then we agreed on valuations, which was pretty much mirrored the same as the deal that he helped fund. So the same
which
multiple.
Which is 3 to 4 times.
3 to 4 times. So
with an 80% GP.
Yeah. So then I said to him, okay, tick, tick, tick. The last area I said we had to cover was how I fund it. I said, you saw I had to come to you at the last minute to get this deal. So
I've got no money.
Yeah. So I don't have the money, but I want to do this. I want to go to the board and say, we want to do this. Are you open to working with me, a bit like our discussion on the vendor terms?
Yeah.
Are you open to working with me on a structure that is a win-win for both? And he said, yeah, tell me what you're thinking. So I said, what I'm thinking is, you've already invested in our company, so you're actually thinking you like to be on this journey, is my read of the room here. So how about you go full swing and join me on this journey? And the way we would fund this transaction is through equity in us, and a convertible note, an additional convertible note, so expanding the one you've already invested in. And so I can't remember all the numbers, but he took a serious amount of stock, shares in our company, a serious amount increment on the convertible note, all on the same terms, nothing changed. He didn't try and screw us or anything of that nature. And we effectively bought this $1 million profit business into our company.
On an 80% GP.
And didn't have to worry about debt, didn't have to worry about
funding,
raising capital.
Bingo.
It gets better. So he's so hooked in us, embedded in us.
Can I have his name and number? I want to go do a couple of deals with this guy as well. This guy's fantastic.
Yeah, sometimes the harder you work, the luckier you
get.
Yeah,
no, I agree with that.
And we got really lucky with this guy, right? He was a real benefactor of the company. So I used to catch up with him all the time and whatnot. And so we had the next opportunity. It was probably 6 months down the track, right?
Yeah.
I was probably buying businesses every 6 months. And so we had the next opportunity. And
You've gone back to him?
Well, because I was in regular dialogue, he just said to me, keep me in mind.
For the next one?
For whatever you're doing, keep me in mind.
Who needs a bank?
So this guy, he's got a fair bit of money behind him, right? So we had the next one. It wasn't a big transaction, but I think we needed, they were taking some shares, but there was an upfront component. It was a father-son operation. And
again, vendor terms?
No, so we didn't get vendor terms. Okay. We got the existing guy helped fund the next acquisition. So effectively, he helped us fund. I'm going to say it was about I'm going to say it's about $3.5 to $4 million of EBITDA.
Sorry, EBITDA. Can you just explain
earnings before interest and tax and depreciation,
right,
and amortization. He helped fund pretty much the majority of that profit to help us get us on our way. And he took a lot of shares, and then his convertible note that he took, he ultimately down the track converted into shares. Because I think from memory it was like a 20% discount or 15% discount. So he got,
So it's a good deal for him.
Good deal for him. He was getting regular payments. He loved the whole, previous podcast we've been talking about a Gary investment, and so growth and relative yield. So he really loved that concept.
So he's getting regular
he was getting regular quarterly distributions from his interest, and he was getting capital growth on his shares. And pretty much every time we did a cap raising, he followed money in. So he kept putting money into the company. He was the number one shareholder on my 10-year journey. I'm going to say probably 5 or 6 years of that journey. He was the number one shareholder.
So he's made some serious money.
Yeah, he loved that, but he put a lot of money in, right? So I don't know what his average price would be.
I hear you.
But yeah, no doubt he would have made money. And then it was only when we started doing quantum leap. So then we did 3 acquisitions at once and raised $40 million. He obviously didn't follow his shareholding at that level, so he started, But by the end of my journey, he was still probably, I'm going to say, number 4, number 5 shareholder, something like that. And that's an example of, you hustle, you work hard, you get lucky sometimes, you come across someone who really loves the narrative of what you're building and so forth, the storytelling fits, and they back you. And this guy backed me. And he backed the board, but, I had the strongest relationship with him. And knowing you,
such a dogmatic attitude or personality, that's the way that I can characterise you. I would assume that going to his place at 6 o'clock, and for whatever reason, if it didn't work out, knowing how you operate, you would have kept going to all hours of the morning until you exhausted all avenues. Would that be a fair way to characterise you?
Yes, absolutely. There you go. Absolutely. But I probably would have been in his house doing it and just wearing him down.
Yeah.
But yeah, he got it straight away. But it was a defining moment for our company because, as I said, in the marketplace, if you agree to deal and then you can't write the check, it's going to spread like wildfire. It's just too embarrassing, and so we would have to have probably pivoted our strategy. Who knows, right? But thankfully to him, he was our benefactor. He made it happen, and then we honoured everything we said we would honour. And we kept strong relationships with him, kept him informed without breaching, insider trading protocols. And it was a fantastic partnership where he was our benefactor when we needed it most, and then he went for the ride when we got because then we became a bit of a market darling in the
I remember.
Yeah, so we had a very, very appealing institutional investor base. So institutions are where super money goes and so forth. A lot of these institutions that focus on small caps and micro caps, we had a lot of them on our register. And by the time I finished at 2018, we'd built a company. I think was turning over about 230 million and doing about 35 mil of profit.
There you go.
Back from when he helped us, and so you can see
a story.
The impact he had to help us on our way to, and he shared that journey with us.
And I would imagine, Mark, in your journey, even away from the ASX listed world, sometimes you look at businesses and you say, geez, that's a great business. I wonder if I can help you to expand it.
Well, that's what I do now. So as I said before, I sit on boards, I do M&A advisory and so forth. And a lot of it is spotting opportunities. And I don't ever want to be a CEO again. I don't want to do that. I don't want people.
I know why.
Yeah, I don't like people. So
you're so subtle. So it's one of your strengths. I can assure you, you're very subtle.
Yeah, my face tells you everything. But I'm very keen to help other CEOs grow, learn from the good and the bad and the ugly of my world, where I can help them and they can learn from a lot of that. So a lot of what I do is working with like-minded CEOs who want to go on the journey themselves, and it's really exciting. It's great, and it's very rewarding.